There is so much going on with the markets right now. We've had parabolic moves in stocks, in sectors. Of course, our friends on the Reddit forum might have a little bit to do with that. Despite all that noise, this market has continued and we feel will continue to go higher. And you can follow one thing, the yield curve. We're going to talk about that process. So much to talk about. Sit back, let's go. Hello, this is Michael Loftus with Wealth and Wisdom TV, where education is the key to a successful financial future. First time here, I am a practicing advisor. What that means, what you hear here, I apply to our clients' portfolios, my portfolios. So we've got a lot of actionable ideas, outside the box thinking. You're never going to hear buy and hold here. So if you like what you hear today, please do consider subscribing, smashing that like button, because that'll help us out a little bit. Today, our agenda. We're going to talk about the yield curve, right? Haven't talked about that one in a while. But first, of course, we're going to go through our charts, the big charts. They're speaking to me as they always do. From there, our signals. Not too many surprises there. Sector spotlight, got some new ones. What keeps me up at night? Game plan, actionable ideas as we go forward. Let's go to the big charts. All right, first up, always we talk about our cycles, all right? Back in the fall, late fall, we made the call to cycle 2. Growth accelerates, inflation accelerates, Fed is hawkish. Now, the idea of the cycles is to be a little bit early because now we're seeing it. Here's GDP, straight up, okay? Yes, that's off a lower base, but the bottom line is that's what the market likes to see. It's that rate of change to new numbers. Here's earnings through last night. Overall earnings are 7.31%. Again, lower base, but they are accelerating to the upside. And then inflation. Look at what's going on in inflation right now. Another higher CPI, but we're seeing it everywhere. Lumber, corn, copper, right? I could go on, and of course oil, which we're going to talk about today. So there you've got your growth, inflation, and then the policy from the Fed, who has obviously been accommodating. So when you look at that, whether we like this or not, okay, they continue to dump money in there. They've already said there's going to be a $2.5 trillion deficit this year, and that's before stimulus. So now let's take this and bring it to the charts. On our signals, we're going to start out in the long term. We've got the monthly view. We're going all the way back to 1982. That's that trend line that we're looking for. And what do I see here? Well, guess what? A couple things. Obviously, we broke above that trend line. So that's bullish. I'm going to tell you right now that this signal's positive. And I've spoken about this in the past, right? This is your trend line on relative strength, okay? What I like about this, finally, we broke above that trend line. Remember, we would talk about negative divergence, meaning hitting highs with lower amounts of relative strength. So definitely long term, we are positive. Midterm, weekly, absolutely. Look at that breakout. That's a beast, okay? There's no question that midterm, we are positive. So let's take a look at the short term, how we apply this. Now, we're not in the S&P, but you look at the overall markets for some direction. What do we see here? This is what's called a rising wedge, definitively bullish, where you get higher highs, okay, and then higher lows. Again, a bullish sign. So next, what am I looking for? Couple things. Now here, as we went up this time, volume went down. So I don't like that. So I felt again, and you can see the pattern. Top of the trend goes down. Top of the trend, top of the trend, top of the trend. Each time we do that, we go down, okay? Each time with lower volume, that's showing exhaustion, okay? And then we've got the VIX and some of the things going on. We're up a little bit today. So then we apply that to some of our trading strategies. So here, this is a big picture of the VIX. Here's the most recent, lot going on here. But what you're seeing is, as I was looking at those trends, right? You hit a low end and then it would spike. And you can correlate that to the S&P. So last time we bought the VIX, We had the spike, we trimmed it, we sold it. That's how you make money. Sold it out, and then we just bought it again on 2.9, and we're going down again. So it's kind of a hedge, a short-term hedge, raise some cash, do that hedge, and that's what we like to look for, okay? So from there, let's talk about that treasury. Obviously, the trend has changed, right? We bottomed out, and it continues to go higher. Now, the yield curve, here it is. I talked about the yield curve back here because the yield curve was going down. That's your 10-year treasury minus your 2-year treasury. When it goes down, gets near zero, below zero, that's recession. Well, we hit that last year. Then we started rising. But look at the yield curve going up. So yields are going up, right? So is 10s and 2s. And then look at that market. Again, the stock market, when you look at what's going on, the bond market's going to give us that signal. All systems are go. Let's go to Sector Spotlight. All right, another big part of this cycle is the dollar. I always talk about this because guess what? It keeps going down. It's crashing, in fact. So what happens when the dollar goes down? Here we are. We start seeing it in cycle 3, and then 2 is when it really crashes. Now, big news this week. I'm going to have Andrew bring up the headline. JP Morgan made the big call. Commodities are going up because of the dollar. Hello? Okay, this is where it started. By the way, it's up 78% from its low. Way to be on top of that, JP Morgan. Okay, so a little bit late to the game, but for us, we look at that dollar, we look at inflation rising. Here's oil, right? We're buying oil, we trim oil, okay? Green is the buys, black is the trims. Again, this is how we make money. We get overbought, we sell. We had a 17% correction, and then I bought again. So I've gone as high as a 6% position, down to a 3%, and now we're back to a 5% position. Okay, emerging markets, again, crashing dollar, great opportunity. I'm just showing the overall index. Obviously, that's good, but we're in Argentina, Brazil, Poland, to name a couple. I don't have the index, but in a few smaller accounts. I prefer the individual countries. That allows alpha, right? Alpha, of course, is return. Then we've got the banks. I've talked about this. So if interest rates are going higher, banks is a good place to be. All right, so here, I started back at the end of the year, got in right here, went up. I didn't sell that time because I only started with a 2% position, and then I added, and we're at a 4% position, like banks going forward. Here's something I talked about in our last video, semiconductors. So here's the key to the process. Okay, you ready? It's a big one. Buy low, sell high. Okay? So semiconductors, obviously in a bullish trend line, great sector, had a nice pullback. We added, and we have gone straight up. The other thing I like is it still has a way to go. Now, when I get to that top end of the range, you know what I'm going to do. I'm going to trim, wait, and then maybe buy something else. That's the key to success when buying and selling the markets, okay? All right, so next up, I'm going to talk about Bitcoin. That's right. It's an index, not the actual Bitcoin. All right, compliance is watching. But when you look at this, I talked about in my opening a parabolic move, okay? That is what a parabolic move looks like, okay? A tremendous move. We've seen it in several individual stocks with these Reddit folks. We saw it this week with the marijuana sector and also many individual stocks that went, again, parabolic. All right, now what happens is you can't be greedy. This is why in the process we have to take profits. All right, now I'm using this as an example only, but as you go up, you take those profits, you try and ride that parabolic ride, but with made money, okay? So for us, I've mentioned before, marijuana is a big holding. We had as much as 6%. We sold down to 1% a couple days ago before the sell-off yesterday, because when you have that parabolic move, you always have a correction. So I'm going to wait and buy back to some of those individual sectors like marijuana, or stocks. Now let's bring all this together and talk about our models and where we are, all right? So right now, sharing a little bit here, okay? Where are we? We've got 13% in cash. That sounds like a lot. That's because we're underweight in bonds, because if treasuries are going up, you don't want to lose money, okay? Now, core assets, we've gone from 23 to 14%. Why? And those core is large cap, tech, and marijuana. So I talked about the marijuana selling, but because we hit the high end of the range. So I'm going to wait for things to reset, start deploying again. Now, emerging markets, I've gone from 11 to almost 15% because with the dollar, I added there. Here's our cycle 2 assets. So that's consumer discretion, oil, okay, bought corn this week. Then we've got stocks. Now I've gone as much as 16% sleeve in our model, and I'm down to 9.7%. This week it was very difficult to find value in individual stocks, so I'm waiting, gonna be patient. Now, we've been fortunate. This is our best, call it year, but also really since mid-year last year with our process, so I'm not in a rush right now, and that's a good place to be. And then we show the bonds. So, next up, what keeps me up at night? All right, what keeps me up at night? Obviously, what's going on. We still have this great divide between Main Street and Wall Street, which has definitively been created by the Fed with lower interest rates. Here's our unemployment report yesterday. Ugly, okay? We're just not hearing about this. Total over 1 million yesterday between, this is the number CNBC talks about, this is PUA, these are self-employed, etc. But we're back to 20 million people unemployed, and that's tragic. The only thing I can see here is maybe a little bit of change in the 4-week average. So this is still a concern. Now, if people are unemployed, all right, what's happening here? Mortgage delinquency. See that correlation? It's very easy to see. I think we're at the beginning of this. The haves and have-nots, right? Yes, home sales have taken off this year, but if you look at the charts, home sales of less than 300 have gone the other direction, and now we're seeing this. This is the other part of America that still hurts. Now, we're talking about the S&P. Yes, you heard me being bullish. Yes, I feel we're going to continue so through the second quarter. But this is the most expensive, overpriced market in history. Okay? PE, price earnings. 15 is the long-term average. Let's look at this. 20 is red, 15 is blue. If we were to get to a 20 PE, which is considered overpriced, that would represent a 49.8% correction. Hello, overpriced. If we were to get to 15, that's over 60%. I'm not saying it's going to happen, but this is grossly overbought, driven by the Fed. That's why we're taking profits as we go. Let's talk about our game plan. Hasn't changed, right? Be smart, be patient, right? Buy the dips. Wait for things to pull back. That's just the way the market works. It's just like gravity. Now, the VIX, you have to be careful here, all right? Again, we bought the VIX this week. Give us a little bit of a hedge for the short term. And then when you get to that high end, you got to be careful, right? If it breaks out and stays above 25, you don't buy. But if it starts trending the other direction, that's when you buy because other people aren't. Others are putting protection on at that time. And then follow us up for updates. We're always putting stuff out there. Have a new video coming out, 7 steps for financial freedom this year. Straight talk, you name it. We're being active. We're here to help. Michael Loftus, Wealth and Wisdom TV.